Personal capital, free tool. Add home to the net worth calculation using an appraisal value. Remove the cap on your capital by using personal capital, free tool. Here we are in our personal capital practice problem. In prior presentations, we practiced linking to financial institutions and uploading data that we can then practice with. We then took a look at financial information and reports, including the net worth report as well as income statement reports, comparing and contrasting it to possibly other type of software that has similar types of functionality with feed connections to the bank. Now we're going to be thinking about the net worth calculation and possibly adding more items to it. So remember, the net worth item is really where the personal capital shines, as well as picking up personal data, not just business data. And so when you're thinking about the net worth, you're thinking about basically your personal balance sheet type of information. Most of the information that can be pulled in from the net worth, which we can see on the left-hand side of the screen, typically, this is just generic data here, would be picked up, and that would be the financial institutions, which of course you would assume would be like your checking account and things like that, but also any other type of institution that we've looked at, including brokerage accounts, 401k type of accounts, and liability type of accounts, such as things like a loan on the home or any other type of loan, and credit card data. That all runs through financial institutions, which typically can be then connected, and that'll pull in the ending balance at any point in time. So it lets us see where we stand at a particular point in time. That's the where we stand at a point in time, as opposed to the performance data, performance reports, meaning how are we doing over time. And then it helps to break out some of the performance information, especially with regards to brokerage type of data there. Now, we might then think, okay, I would like to add some other information to my net worth calculation that is not from a financial institution. So now we're thinking the main one being the home. So if I had a home, then the information from the financial institution would be the loan. They would know about the loan. Now, although the home might be there for like collateral on the loan, they don't have typically the value of the loan on the books. Also note that if you did this in something like QuickBooks, then if any kind of asset on the balance sheet type of thing, I'm jumping over to QuickBooks, you would have to enter that basically the beginning balance. And just realize when you're thinking about something like equipment or like a home, for example, even if you're doing personal data in something like a QuickBooks, you have that same kind of issue with the increases and decreases in the value of the home. If you put the home on the books at the cost, that's typically what is done. Then if the home goes up in value and you have not yet sold it, similar to not selling stock, you have what would be called like an unrealized gain. And there's a question as to whether you should record the income on an unrealized gain or not, because as the gain went up, it could go back down. So you might think, well, real estate never goes down, it only goes up or whatnot. But then, of course, there's a question. It could go down, it's just that's the question that will typically come up. And it'll come up with the home. It'll come up with stocks. So if we think about personal capital type of situation, we're typically taking that ending balance, which means our net worth is being adjusted to what the ending balance is for assets such as the stocks. And we can do a similar type of thing for the home using an appraisal. So the way we could do that is we could hit the plus button up top, and we're not going to be choosing a financial institution, but instead simply adding another item down here. So when we want to add other items to the balance sheet, the manual items we can add are here, and this would be an adding, hold on a sec, this would be adding an investment or more. If I hit the more, we can add like our car, jewelry, art, and so on and so forth. There's a nice little appraisal tool that we can actually use the appraisal tool through the software that is basically using Zillow, which is a common online kind of appraisal tool. So let's use that item. So I'm going to add the home using Zillow, and I'm just making up an address. This is just a made up address. So primary residence, it could be primary, a vacation home, or investment property. I'm going to assume it's the primary resident here, and I'm just going to make up an address. And I'm going to say 866 West 13th Street, and then I'm going to say AP Apartment 3. And this is an AZU's California in 91702. So I'm going to use Zest this item for the home value. Let's go ahead and use that. We'll say yes, please do that, and say done. And then it says link another account to see your total net worth. So now I'm going to say done, And so there we have it. Then we see down here on the asset side of things, we got the home, we got the cash, we got the investments, and then the credit information, and then the home. Credits being like liabilities. And then the home, it has this little yellow dot saying, please come back later. So it's going through the appraisal process. So hopefully that will be picked up at some future point. So we'll go back and then we'll come back into this at a future point. Also note, if you're taking a look at your net worth, you can go to the overview and net worth here, and that could break it down a little bit more clearly. You got it on the left-hand side. Now, once again, we got the cash, investments, credit, liabilities, in other words, and the home then down here. So we'll wait till that home populates. And then, of course, if I did have a home on the books, we would probably have a liability on the books as well for the mortgage of the home. That would typically pull through the liability. The mortgage is what it is. That would pull through from the financial institution. So we might add that just to kind of balance that out. But just realize the mortgage would come through as what it is. The home value then could be appraised. So do we want to put it on the books at the cost, which would be more the conservative way of doing it, having typically a lower value, not taking into consideration the increases in the change of the home as it goes up in value, given the fact that the market could go up and down, although home prices hopefully are fairly more static and they go hopefully one direction up, at least in our lifetimes and whatnot. So, and so we could then, or we can put it on the books at the appraised value. We've given it a little bit of time. It hasn't given us the appraisal yet. I'm going to go back into it and actually manually put it in at this point in time. So I'm going to go into it here. It's going at Zillow. So that's going to be an appraisal type of tool online, typically used if you're thinking about like purchasing a house. So I would usually think about it for homes that are on the market or have been recently sold. And you can find that information by going to their website at Zillow. And I'm currently looking or searching through basically an Anaheim location to pick up a home. You can search homes that have been sold, and you can search homes that are on the market. So right here we got the sold items, for rent, and then for sale. So this tool will typically be useful then. It'll give you an appraisal, can give you a fairly good appraisal if the property was sold recently, and you would think that it can give you some kind of estimate if it's on the market. If it's something that hasn't been on the market for some time, then any appraisal, of course, is somewhat of a guess because every home is unique, and therefore the appraisal or the actual value of that particular property is difficult to tell if it hasn't been actually sold on the market for a long period of time. So I'm not quite sure how they're pulling in like an appraisal of a home that hasn't been on the market for a long period of time. I'm going to go back in here and choose the other option, which is simply to manually put it in there. This could be a more kind of conservative option as well if you want to just kind of manually put your home price in there. You might put it in there more closer to what you paid for it, because that's usually what the more, conservative kind of thing. It's usually going to be a lower amount, the home possibly then going up in value, but you don't know exactly how much it's going up in value for, and you don't know if it's going to go back down again. So you can do your own kind of appraisal process, possibly looking at a site like Zillow and kind of figuring homes that are for sale in the region that you are in, and get an idea of the home sale there as well, or the home value. So I'm going to go ahead and say save, and so now we've got our value here. This also would come with, you would think, a mortgage. So if you had a home on the books at $500,000, you would think that you would have basically some other loan or mortgage on the books. That loan or mortgage will typically pull in when you are using a financial institution, because that is something that will be on the financial institution. We'll go ahead and add a couple more things, possibly a loan and like an automobile in a future presentation to round out our balance sheet. Of course, you can see the balance sheet on the left-hand side. You can also see it in the drop-down if you go to basically the net worth for the overview net worth, and then you can close this item up and close this item up. And that'll give you basically your balance sheet information down here, and then we've got the home on the books. They put that at the bottom, even though it's kind of like even though it's an asset, because they put it in the other asset, meaning it's something that's manually put into the system, or something that's not basically through a financial institution, has some kind of appraisal process that is included within it. And obviously, just note this is just a made up value as well, so this is just practicing the numbers here.